All right, here's a thought experiment for you. What if you could hop in a time machine and buy up a bunch of land in Silicon Valley before the tech boom? Well, today we're going to unpack a really fascinating investment thesis that says you can kind of do the digital version of that right now. Let's dig in and see what it's all about. And the central claim here is, well, it's a big one. It's that investing in a company, BMNR, right now is pretty much the same as buying up Silicon Valley back in the 90s. We're not just talking about buying a stock here. The idea is that you're buying a piece of what could be the next huge technological revolution. Okay, so how on earth does that even work? Well, the whole thing really boils down to one simple, but honestly, pretty powerful metaphor. This idea of digital land. Let's break down what they actually mean by that. So here's the comparison they're making. You've got to imagine the entire Ethereum network as this huge, basically undeveloped digital continent. And in this world, BMNR stock, it's not just a share. It's more like a deed, right? An owner certificate that says you own a piece of that digital real estate. So what makes any land valuable, right? It's all about location and what you can build on it. And the argument here is that this digital land is basically prime real estate. Why? Because you've got big players like Wall Street who want to build the future of finance right on top of it. And they're planning to use these really interesting tools like asset tokenization, turning physical things into digital tokens, and smart contracts to get it done. All right, so if the whole point for BMNR is to snap up as much of this digital land as possible, how are they actually doing it? Well, their strategy is pretty unique because it's set up to be completely 100% debt-free. And this is basically their playbook, their growth engine. It's a simple cycle. First, they issue new stock, those owner certificates we talked about. Then they take the cash they raise and use it to buy more Ethereum, the digital land. And here's the kicker. They just repeat over and over. It's a loop that lets them just keep expanding their holdings without ever having to borrow money. And that's really the secret sauce right there. It's a self-funding loop. By using their own stock to buy the assets, they can be super aggressive in growing their digital land portfolio, but without all the risk and the pressure that comes with having a ton of debt hanging over your head. Okay, so owning a bunch of land is great and all, but you've got to make it pay the bills, right? So how does this digital land actually generate any value or, revenue? Let's get into the business model. Now, this is where it gets really interesting. This is the core argument. The idea is that even though the market price for this land is down, the actual activity on it, people building things, developing new projects, is at a record high. So you've got this huge disconnect, which, according to the thesis, points to it being massively undervalued. So how does the cash actually flow? Well, there are a few potential income streams. First up is Ethereum staking. You can think of this just like collecting rent on a property. Then, down the line, there's the possibility of something like infrastructure taxes, fees for using the network. And finally, there's asset tokenization, which is kind of like taking that raw land and actually developing it into something valuable. And just to make that last point a little more real, think about this idea from the source material. Imagine a future where you could literally trade, say, 10% of your neighbor's house on the blockchain. That's the kind of world asset tokenization could open up, turning something big and clunky like a house into something you can easily trade. Okay, so that's the company's game plan. But what about the investor side of things? According to this thesis, the strategy is actually a pretty classic one, just applied to this brand new type of asset. And that strategy is something called dollar cost averaging, or DCA. And the idea is really simple. Instead of trying to be a genius and time the market perfectly, you just invest the same amount of money on a regular schedule. What happens is you naturally end up buying more shares, more of those deeds, when the price is low, and fewer when the price is high. Simple as that. And get this, the commitment to this strategy is pretty wild. We're talking about a daily purchase plan of somewhere between $3,000 and $20,000. So yeah, this isn't just someone dabbling. This is a massive, high-conviction bet that this current downturn is basically a fire sale for these owner certificates. This whole approach, this high-conviction buying through the depth strategy, is often compared to how some of the really successful early investors in companies like Tesla played it. It's that same kind of long-term belief in something disruptive. Okay, so we've talked about the whole digital land idea, how the company works, where the value comes from, and the investment strategy. It really all builds up to one big final question when we look to the future. At the end of the day, this whole thesis is a massive bet on one single idea, that the future of wealth isn't being built on physical ground anymore, but on digital foundations. And so the question it really leaves you with is, when people look back on our time, will this digital land be the new Silicon Valley? And more importantly, who are the people who saw it coming and owned a piece of it?